Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 2nd of March. Starting off with Armadale Capital, which people seem to have gone mad about, incredibly. Interesting setup at the moment with the hammer candle effectively for Tuesday off the, or above actually, the 50-day moving average of 3.07. Implication is that while there's no breakback below the 50-day line, we should head up to the 200-day moving average of 4.32. Best case scenario target at the moment, 5 pence over the next few weeks, especially while there's no break back below the 3 pence level. Borders and Southern is next, and this is interesting with this extended consolidation at and just below the 50-day moving average 1.96. Might continue for a little while longer, but at least while there's no end-of-day close back below 1.8 pence, which would be a surprise. After the two higher lows that we've had since December, we can look towards the 200-day moving average of 3.04 pence, an uptrend line in the RSI window as well, which is helpful. Best case scenario over the next couple of months up to 4 pence, which is the top of a rising 2015 price channel. Next up is stock which looked at before and was quite happy with. Unfortunately, the pullback was rather painful. But at least we're back above the 200-day moving average now at 44.52. Decent end-of-day close there. Might be a bit of a wobble still, but probably while we're above the 40 pence level, we should head up as high as 80 pence over the next couple of months. Stop loss on the bull argument, probably back below the 10-day moving average at 36 pence at the moment. But ideally, the shares will start powering ahead from current levels. Next up is stock which I've been asked to look at on a number of occasions and managed to avoid. But today is the day. A nice bull flag above former resistance at 0.075 pence. And while we're above that, looking for a decent breakout towards top of a rising trend channel from the basically the beginning of last year, heading for 0.15 pence. This looks like a decent recovery situation. Any dips towards the 0.808 pence zone regarded as a buying opportunity. Stop loss back below the 50-day average, 0.06 pence at the moment. Sack oil is next, and an interesting situation since it's been rather patchy, but the overall flow here is of a rising 2015 price channel based at a penny, and with the resistance line projection heading towards 2.5 pence. That obviously looks like it's a long way away at the moment, but might be a 2 to 3 month target, especially on a decent weekly close above 1.4 pence, which was the early February resistance. On to the last stock of the day, which is Strategic Minerals. Obviously disappointed us in terms of the bull crowd, with the breakback below 0.2 pence at the beginning of last month. But it does look as though we've got a possible falling wedge formation here, which is a bullish formation, so it's basically above 0.7 pence, which is the floor of the channel. We would be looking for an intermediate recovery back towards 0.2 pence as part of the falling wedge situation. Uptrend line, or at least a flat line here, bullish divergence line in the RSI window, providing implied momentum to a recovery from this zone. But obviously, if we do go back below 0.07 pence, the theory is not valid anymore. That's it from me. More updates at the same time tomorrow.